Ladies and gentlemen, good day and welcome to the Meghmani Finechem Limited earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Monali Jain from Go India Advisors. Thank you and over to you, ma'am.
Thank you, Vivian. Good evening, everyone, and welcome to Q1 FY23 earnings of Meghmani Finechem Limited. We have on the call Mr. Maulik Patel, Chairman and Managing Director, Mr. Kaushal Suparkar, Managing Director, Mr. Sanjay Jain, Chief Financial Officer, Mr. B. Ravi, Strategy Consultant, and Mr. Milan Kotecha, Investor Relations Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that company faces. May I now request Mr. Maulik to take us through the financials and the business outlook, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Monali. Good evening, everyone. Welcome to the call to discuss MFL's Q1 FY23 performance. I trust you had the opportunity to run through the earnings presentation which was shared earlier today. Q1 FY23 was a very good quarter for MFL both in financial terms as well as on operational side. On operations side, we have achieved highest ever or highest capacity utilization for all our products. On financial side, we have achieved highest ever revenue, EBITDA and PAT for the quarter. We can attribute this to the robust demand for all the products, leading to high realizations and the volume growth of 5% because of high efficiency and the capacity utilization. On the strategic side, in Q1 FY23 on 1st June 2022, we have commissioned India's first epichlorohydrin plant based on glycerol process. We have commissioned ECH plant within committed timelines and within the estimated capex limit. Credit for the same goes to the whole team. At Meghmani Finechem, our team is focused on protecting the environment by using the best and the latest technology. In line with that, we have entered into JV to set up 18.34 megawatt wind solar hybrid power plant to meet the energy requirement of our existing as well as future projects. Also, as per the process to get the responsible care certificate, we were re-audited, and as we met its entire rules and requirements, we were awarded the responsible care certificate for 3 years. On 18th July, we have commissioned India's largest CPVC resin plant with a production capacity of 30,000 tons per annum. This project was also completed within the committed guidelines and within capex limit. As of now, the products are under approval process with various CPVC pipe makers, as the products are approved by various customers, which should take around 3 months. So post that, we expect volume of CPVC to pick up Q3 FY23 onwards. Considering capex that we have done in last 2 to 3 years gives us confidence to meet our revenue guidance of 50% growth in FY 2023. Also, to further growth, the capex on chlorotoluene and its value chain has started, and also worked on setting up a R&D center is initiated. Hence, we are moving in right direction for our long-term growth of achieving 5,000 crore revenue by FY27 with strong ROC. By FY 2027, almost 60% of the revenue would be coming from the value-added derivatives and the specialty chemical segment. Now, I will hand over to the call to Mr. Sanjay Jain, our CFO, who will take you through the financials.
Thank you, Maulik. As Maulik already mentioned, the company has achieved ever highest turnover of 533 crore, that is a growth of 84% year-on-year basis. The higher capacity utilization across the division and better relations attributed to this growth of 84%. In absolute term, EBITDA has doubled at 187 crore. The EBITDA margin has significantly improved from 35% to 35% Q1 FY23 against 32% in Q1 FY22. Thus, this is an increase of 333 bits on quarter-to-quarter comparison. This is mainly on account of higher realizations and better capacity utilizations. while the margin in the quarter were higher on account of higher realization. But over a period of time, we believe that the margin should be, for the year as a whole, should be around 28% ±2 for the year as a whole. Our PAT grew 3x to rupees 108 crore, with PAT margins stood at 20%. Overall plant utilization increased to 94% in Q1 FY23 compared to 88% in FY22. Capacity utilization of caustic and hydrogen peroxide stood at 94%, while chloromethane stood at 105%. The utilization of caustic soda and caustic potash is up by 104% and 130% respectively. The return of capital employed improved to 33% in quarter 1 FY23 from 19% in quarter 1 FY22. The debt EBITDA has improved to 1.6x Q1 FY23 from 2.x in quarter 1 22. The ratio improved due to absolute growth in the EBITDA, even on the increased debt due to CapEx. The return of equity improved to 48% in quarter 1 FY23 from 22% in quarter 1 22. Expansion project of caustic soda is moving as per schedule and will be likely to commission by end of quarter 2 FY23. For this quarter, we spent 57 crore on CapEx against estimated budget of 180 crore for the year as a whole. With this, we can now open the floor for Q&A. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Participants who wish to ask a question may kindly press star 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Mervyn Kotwal from B&K Securities. Kindly proceed.
Yeah. Good afternoon, sir. Congrats on the strong set of numbers.
Thank you.
Yeah. So I have a few questions with respect to, I think, the current slight correction in caustic prices. So are we seeing this more as a function of additional supplies coming from the market, or is this more a function of a little bit of weak environment that is
Mr. Kotwal, I'm sorry to interrupt, sir, but there seems to be some disturbance in your line. If you're using the handset, could you please?
No, yeah. Is it clear now?
Yeah, this is better.
Yeah. So my question was that basically, off late, I think we've seen a little bit of weakness with respect to caustic prices. Is this more a function of there being sluggishness in demand, or is it more a function of seasonal factors, since I think most places have got disproportionate rain? And my second question is that we keep hearing a lot about this European power crisis. So has that resulted into some new opportunities emerging for the entire sector with respect to exports?
Yeah. So I think most the answer I will give you in a different way because you are right that there is a slight correction in the caustic soda price. But if you see the other commodities and other products which are reduced, that much price reduction is not there in the caustic soda. And that you have given the correct answer that the European are mostly the gas-based economy. They are not oil-based economy. And there was no impact in terms of the Chinese lockdown in the European and the US economy. So their caustic soda prices remain high in both the continents. So because of that, we feel that the caustic soda price, the correction which will not happen as much as it is in the other products which we can see right now due to the Chinese lockdown and the oil price reduction. And the caustic soda, because of the two continents has a high demand and the power pressure, definitely the entire energy cost in the worldwide has not any major change in terms of the cost. So this will continue to remain high. That's what we feel as of now.
Yes, sir, but are you seeing some demand for export for our products basically?
Hello?
Mr. Kotwal, are you online?
Yeah. Sorry, I think there was some misconnection. So what I'm saying is, are we seeing some kind of import opportunities to Europe, which are surfacing because of the expected power crunch in the winter months that is anticipated to take place in the continent? So are we seeing increased inquiries?
So normally, when the prices are high in the globally, normally this is act as a global situation, and it is not only depend on the one or two continents. So price, definitely European price is higher and the US price is higher. So definitely there is a supply chain. The supply chain will be changed immediately based on the pricing effect based on the continent. So that is a high demand and high opportunity will be possible in the coming times due to the high cost of European chemicals overall, if you see.
Right. Thank you so much.
Thank you. Participants, if you wish to ask a question, kindly press star 1. The next question is from the line of Riya Mehta from Equitas Investment. Kindly proceed.
Hello, sir. Congratulations on great set of numbers. Very commendable results. So I actually want to start with caustic. So basically, I was seeing because of recessionary pressures globally as well as decline in textile demand. So recently all mills were closed. However, because of lower cotton prices, they restarted. But there is a tepid demand for textile, which forms almost 20 to 30% of caustic demand. So what is your view over there? Are we seeing demand pressure as well as lower prices?
So, just to give you answer, definitely in the textile sector is down currently. But if you see globally, the caustic demand, which was surged recently, which is mainly because of the construction sector and the infrastructure sector. So the alumina, which is the sector, which is also the demand is continuing. And definitely the agrochemicals, like in India, to be very precise, textile sector is down, but the agrochemical sectors, which is there is a great demand right now, and there was no impact in terms of the recent correction which is happening in the chemical sector. So the demand in the agrochemical sector, which is continuous, that is also. So every sector has a different calculation based on the current end user market. So every sector is not going down as we see like textile industry. So definitely that's why that is the only reason why the caustic has a least impact in terms of compared to the other chemicals.
Okay, so overall as a total across all the sectors included, how much decline in demand do you see in domestic markets? Because capacities have also been added by a lot of your competitors, and is there a kind of overcapacity with decrease in demand? And if so, how much would you quantify the decrease in demand?
So caustic soda, definitely the many people are in the pipeline, and everybody is we are also expanding because we are, the growth of caustic soda, it is happening based on the GDP of the country normally.
Right.
And, so that much capacity should be added once every year, in India at least. And sometimes, it is little higher capacity than required, and sometimes, so it compensated over a period of next 3 years, in terms of the capacity per year requirement, because demand of India is also growing, because we are just starting an infrastructure spending, the chemical sector because of the PLI, agrochemical sector, pharmaceutical sector, so everybody is expanding in India. Definitely the current demand has a different sentiments right now, but overall if you see the capex which are going on right now of the different industrial sector, that will continue, and I think the demand over a period of time will absorb whatever the capacity will expand in coming times.
What capacity utilization do we forecast for this year?
Around 90% we expect that. For caustic soda, we expect that about 90% is the optimum capacity to run our plant efficiently.
Okay. So we even after the incremental plant which is going to get commissioned, that will be on a operational on 90%, right?
On pro rata basis, yes, 90%, even on the incremental capacity.
Okay. Second question would be, I was just going through the financials. I see inventory building up. So change in inventory. So what was that? Like, is it because of coal? We had bought a lot of coal, or what was it?
Yeah. So, that is mainly the reason, because the two major plants which we have commissioned in Q1, which is epichlorohydrin and the CPVC. So definitely both the products input, which is PVC and the glycerin, we already having a stock. We have kept a stock because, we need to keep a planning for at least for 2 months inventory, looking at the future. So that's how the inventory is building up in the balance sheet.
And now as the cycle, and just to add to that, now as the cycle of in terms of selling will start, that rollover will happen. So what you are seeing is as on FY22, when we just had inventory and the plant was not commissioned. So that will start rolling now.
Right. And as far as power cost, what is the current cost per unit? So I remember in Q4, you had told that it's because of the increase in coal prices, it had run up to 9.15 per unit. Whereas the grid cost was around 8.5. So currently, what would be the cost per unit for us?
For this quarter, the generation cost is round about 9.5 for thermal power plant, for captive power plant. Yeah.
And for the coming, since the coal prices is reduced?
Actually, yeah.
Yeah. So, there is a slight effect in the coal price in the coming quarter, but it will come in the Q2 and Q3 onwards. Yeah.
So currently, what would be the price per unit basis, if you could help me out with that?
See, the current prices, as we also have seen the coal prices to cool down a bit. But again, how much it will be per cost unit, it's too early to comment. We are just in the starting of our quarter.
Yeah. Because the coal, you can't procure for a longer period of time. Normally the coal keep coming, and at least we don't keep a more than 15-20 days inventory of the coal. So definitely, based on the price, what will happen in the current next 3 months, I think, which is very difficult to predict right now in the current situation. But yeah, we don't see major change in terms of the energy cost worldwide, because of there is a pressure from in the gas side. There is already pressure in the European countries.
Okay. And what will be your current exports in the current quarter as a percentage of sales, and how much do we see it going forward as?
So you're talking about the export versus domestic?
Yes.
We do have exports this quarter, but actually, particularly for ECH, which we have recently commissioned. But if you look at the company as a whole, there is hardly, not substantial, maybe around 5 to 7% of total revenue.
Okay. And as a percentage of caustic, how much caustic would we exporting?
Yeah, currently we are doing only 5 to 7% of the caustic soda which we are exporting right now. But in coming times, we expect, looking at the current situation, we find it that the ECH we are able to export in the different continents from Q3 onwards. So the export percentage will increase in coming times, looking at the current scenario.
Okay. And what are the prices like for ECH? Have you seen any decline in that from when we had planned for commissioning CPVC as well as ECH?
It's much higher than that. Yeah. So I just give you the brief that when we do a project, when we conceive the project, that time it was 120 rupees, 110 rupees kind of thing. But it went up after Corona, and after Corona, this went up to 225 level.
Right.
200 to 250 level, almost 250 rupees level. But currently the price of ECH is around 215, 220 level right now. So it is coming down slowly, yeah.
Okay. And what is the sustainable we can just take it for our assumptions?
Frankly speaking, it is in the current situation, it is very difficult to say, what is going to be.
I understand. Yeah. And just one last question at full capacity, could you give the breakup of the revenue from each segment, like caustic, ECH, etc.?
Revenue breakup.
See, again, as a company as a whole, we just give in terms of breakup of revenue, chlor-alkali and the derivatives and the specialty segment. So we would like to keep it that way.
No, on a full capacity basis.
So on a full capacity basis, in FY24, when we will be reaching to the optimum capacity utilization for all the products that we have commissioned recently, that is CPVC and the ECH and chlor-alkali additional capacity, at that time, I think around 45-50% of the revenue will be contributed by the derivatives and the segment.
Hello?
Yeah.
Yeah.
Were you able to hear the answer?
No, I missed it. There was some cross connection. Sorry.
Basically, once we will be reaching to optimum capacity utilizations for the new plants, which is ECH and CPVC in FY24. In FY24, once that happens, we expect our revenue contribution from derivatives and specialty to be around 45-50% of the total revenue.
Okay, got it. And one last question from my end would be, what is the current ECU of caustic and what is the chlorine realization right now?
The current issue realization is 50,000 for caustic as of now. It's a little bit on the higher side compared to last quarter 4.
Sorry, it's still higher than last quarter 4.
No, the current ECU is
slightly higher.
The current ECU is around 50,000.
Slightly higher.
Okay. Yeah, I think Q4 we had done around 49,000. If I'm not wrong.
Yes.
Okay. Hello?
Yeah, yes, that's right.
Okay. And chlorine?
So chlorine, again, when we calculate the ECU, chlorine is factored into that. So it comes into that. But considering the last quarter, it was a bit negative. But again, that is adjusted in the caustic soda prices, so that is taken care of. And also, we use our chlorine in the chloromethanes plant and further in the CPVC. So when it's negative, we enjoy that benefit in our derivative plants, and when it's positive, we enjoy in the caustic soda plant. So that's the beauty because of having the integrated plant.
Yes. But what would be the negative realization if I can get the number?
Around 4.5 per kg.
4.5 per kg. Okay. I think that's it from my side. Thank you so much.
Thank you. Participants are requested to kindly restrict your questions to 3 per participant. The next question is from the line of Amarnath Bhakat from Ministry of Finance of Oman. Kindly proceed.
Yeah, hi. If I look at your current performance,
hello, Mr. Bhakat.
Your ROC is 30.
Yes.
Yeah.
Amarnath.
Can you hear me?
Amarnath Bhakat.
Yes. Hello. You can hear me? Hello. You can hear me?
I guess we are not connected, I guess, with him, so we can shift to the next person.
Can you hear me, please?
Sure, sir.
Hello. Can you hear?
The next question is from the line of Rohit Nagraj from Centrum Broking. Kindly proceed.
Yeah, thanks, and congrats on a very good set of numbers and commissioning the 2 projects.
I guess we need to check our line, I guess, because no one is speaking, so.
Hello?
Are the people connected?
Hello?
Can you hear? Hello?
Hello? Hello?
Just a moment, Mr. Nagraj.
Hello?
Kindly be online, sir.
Yeah, we are here. Rohit is connected.
Yeah. Can you hear me now? Hello? Can you hear me now?
Rohit, sir, are you able to hear us?
Yes, I can. Can you hear me? Yep. Okay. Thank you. Thanks for the opportunity and congrats on good set of numbers.
Just want to confirm, Rohit, are you able to hear us?
Hello? Yes, I can. Hello?
Yes, Rohit, we can hear you now. It was earlier blank, so if you can just repeat your question.
Right. So congrats on a good set of numbers and commissioning of the two projects. So first question is on epichlorohydrin. In terms of glycerin availability and incremental usage for glycerin, how are we connected with the vendors in terms of medium-term or long-term contracts? And second question on the same thing, whether the plant, I think the plant is about 1 month operational. So is it stabilized and is it giving us the normal spec products? Thank you.
Yeah. So Rohit, just to give you answer, plant is little low capacity right now. We have just started. So every quarter it will increase the capacity gradually. And the current we have started selling to all the customers, which is in India, within India, to European customers as well as US customers. So once they will receive it and probably they will use it and probably they will start placing the new orders from the quarter 3. So we believe that looking at the current situation, all the trial orders everywhere it is going, we feel that the quarter 3 onwards the actual volume will start reflecting and consuming. Actually, we are able to increase the load which we are running right now then in quarter 3 onwards. And looking at just to give you the answer for the glycerin, so glycerin, globally, the glycerin price is a little bit coming down. The reason behind it, the palm oil export was banned in the Indonesia initially. Right now, the government has released that exports. That is one of the reasons. And another reason is the biodiesel percentage, which is going to add, which is like in India, ethanol we are using in the blending of petrol. The same thing, there is that kind of palm oil based biodiesel in Indonesia. Government has increased the percentage from 30% to 35%. So definitely, when you produce more biodiesel, it will come out as a byproduct glycerin more. So definitely, it is good sign for as a raw material user of glycerin that we will get a glycerin and the more and more biodiesel will produce and more glycerin will be available in the future.
Right, got it. My second question is on CPVC. So given that the plant has started a few days ago, once it stabilizes and starts producing the spec product, what will be the time frame within which we can reach probably 100% utilization, given that currently it's completely import substitute product and there is impending demand in the domestic market? Thank you.
Yeah, just to give you answer, this is not where we can reach 100% capacity. So definitely, maximum we have considered this kind of plant, we can reach maximum up to 75% capacity. You cannot increase more than 75%. Definitely, you need to do minor debottlenecking and then you are eventually reach it. But initial, we have considered that 75% is the max level you can generate because this is a lot of solid handling plant where there is always a restriction in terms of the output. You cannot reach more than like the 90% or something which we are getting it in all liquid products right now. And the CPVC, this product, we have started producing. The same situation, we have given a trial to all the customers who are making pipes and fittings from that. And once, this is, I think I would say it is almost 60 to, 45 to 75 days journey where, people start from the small orders. Eventually, they increase the, size of the lot. And I think after 60 days, when they're comfortable, I think they will increase the quantity as a regular from quarter 3 onwards. That's what we see from currently. So, so I think more or less we have already, contacted all the customers and probably the initial trial orders are about to finish probably by end of this month. And slightly bigger orders will start generating from the quarter 2, but actual sales will actually start from quarter 3 onwards only. Optimum will reach.
So effectively, maybe by start of FY24, we'll be able to utilize the capacity optimally if the product is approved by our customers?
See, product will be definitely it will be approved by I think in next 45 to 60 days time maximum, and start people ordering slowly and gradually from quarter 3 onwards. They will increase their volume. and we are expecting by quarter 4, end of quarter 4, we'll reach to optimum level of the capacity.
Sure. That's helpful. Thanks a lot and best of luck, sir.
Thank you. Participants, if you wish to ask a question, kindly press star 1. The next question is from the line of Amarnath Bhagat from Ministry of Finance of Oman. Kindly proceed.
Yeah. Hi, sir. Can you hear me?
Yeah. Yes.
Hello?
Yes, we can hear you.
We can hear you, sir.
So, now your current ROC is 33% and your current EBITDA margin is 35%. And you're guiding for 2023, the EBITDA margin, I think, is a year-wise EBITDA margin of 26%, which is around 10% lower, and return on capital employed from 33% to 25%. Now, of course, the sales growth projection is 50%. What would be the impact on the absolute EBITDA number then? I mean, it will be going because the EBITDA margin is coming down substantially, and I believe probably you are estimating the current realization will result into drawdown of this EBITDA margin from 35% to 26%. So can you please highlight what would be the impact on an absolute EBITDA level or an absolute profitability level?
Yes, I'll take this question. All the guidance which you are given at the beginning of the year are all for the long term, for the entire year as such. This particular quarter has been exceptionally good, looking to the kind of price increases and the offtake which happened. This we didn't really expect that this would be the kind of an offtake for the first quarter. So when we give a guidance, we normally look at averaging it out for the entire year. So we do believe that yes, this particular quarter's good performance can increase the overall guidance a little higher, but we still are looking at the next quarter or so before we can really see that this impact will be sustainable for the entire year. So that's the reason why we would not change the guidance at this point in time, but we can always revisit it in a quarter or two later. Moreover, the absolute...
So can we expect a little bit increase on the guidance, at least for the next year, considering what has happened in first quarter?
Yes, so we will look the second quarter and maybe the third, at least the second quarter end and see how the proportion will happen for the Q3 and Q4, and we can definitely do it when we have the next call. At this point in time, it's too early to really say that it will have a permanent impact for the entire year. That's the reason why the guidance hasn't changed at this point in time. The absolute EBITDA definitely will be increasing. Margins, as we always say, are not really relevant, 26, 28, 30. These are not what is exactly the way to look at it, because the new products that will be added, ECH and CPVC, have a better asset turnover ratio, and because of which the EBITDA margins may be low, but the absolute EBITDA will be increasing. So as far as the cash flows and those are concerned, I think we are still very much on course to be achieving our guidance, maybe a little better because of the Q1.
So, and the follow-up relating to this guidance itself, you are saying 50% expected growth compared to 2022 base, which is anyway high. Now, if I look at your capacity utilization, your caustic soda 104%, caustic potash 130%. This chloromethane and the new plant and the others are little lower. But this 50% will come from where? You are already running at a higher capacity utilization level, and the two new plants which is coming, it will take time to really contribute meaningfully, at least for the current year. So this 50% growth, and as we all know, the commodity prices globally is shrinking, which will always have a negative impact in terms of the realization. So one side, I have already working on an optimal capacity utilization even more. My realization is expected to come down compared to what is there in the quarter one. The two new plants which has been now commissioned, which will take time to really contribute meaningfully. So from where this 50% will come?
Yeah, I think that's right, that all the price of the raw material is coming down, so finished goods eventually will go down. But when we finalize this budget, that time I think we have given a forecast based on the three projects. One is ECH, because we expect that the ECH volume will pick up from quarter 3 onwards. Even CPVC, which is also a new project, that volume also will started picking up from the quarter 3 onwards. So quarter 3 and quarter 4 will generate the CPVC and the ECH revenue, along with the caustic soda expansion, which we are starting by quarter, as we mentioned, in quarter to end of quarter 2. Because that we already already producing caustic soda of 294,000 tons per annum capacity, and which will increase to 400,000 tons per annum. So that we don't need a time to increase or to reach at optimum level, because we already having an experience of so many years. So definitely, and we have already the approval placed in the customers and everywhere. So definitely the volume will start picking in terms of the caustic soda also. So all 3 projects put together, we have suggested that we will increase the 50% revenue.
Okay, that's very nice to hear that, because 50% on the top of the current sales growth is very optimistic, appears to be. But if it is achievable, it is nothing like that. The second question relating to the vision statement, sir.
Yeah.
Yeah, please. Carry on, sir.
Yeah, as you rightly said, the prices of the raw material are down, but the current situation, we feel that in China there is a lockdown and there is too much pressure right now. So we would like to wait one more quarter and then probably comment about the entire year. And energy prices has not come down, so the caustic price also, there is a high chance that will remain continue for the entire year.
Okay, sir. My second question is relating to your vision statement. Though I realize that finally the vision statement, but you are talking about achieving a revenue of 5,000 crore by 2027. So by the end of 2022, you was 1,500. So 2027, 5 years down the line, you wanted to make it more than 3x. Now, do we understand that you are going for a high value-added product like CPVC and ECH and all, but achieving more than 3x in next 5 years, where most of the items are commodity, we don't have a real visibility of how the prices will pan out. There are so many underlying volatility, either locally or globally. I'm just trying to gauge and kind of a sense how this can be achieved. Just an overall vision, not to go to the details, because in a commodity-dominated market, a company giving 3.5x kind of an increase in revenue in next 5 years is very uncommon. That's why I'm asking this question.
Yeah. So that's a good question. So when we have given a timeline, the 5,000 crore target, so we have in the mind that currently we have a chloroalkali complex, and this is the last phase of expansion which we are doing it for the caustic soda, from 294,000 to a maximum around 400,000 right now. But after that, all the focus we are going to have in the downstream product, which is value-added product either from chlorine, hydrogen or caustic soda. So definitely as a company, if you see our past 3 years, since then we have changed the strategy. We would like to focus more as an integrated player, and we are continuously focusing and adding the molecule which is import substitute. So definitely, as you rightly said, that the recession, the global thing and everything is, I completely agree. But in terms of India, we are still, there are many chemicals is completely import substitute. And if you see the volume of all the chemicals which is growing, so definitely globally, when we add the product, definitely our target is export as well, like the chlorotoluene as we are expanding. But our primary focus is the import substitute molecule based on the domestic market and domestic demand. Definitely, if it gets added advantage like the ECH, we started with the domestic demand, but we are exporting right now. The same thing definitely in the other products also we will continue. But the domestic, I think we believe that the India will be better off compared to whatever happens in the world. Definitely the price pressure, the impact, the competition will come. But in terms of the volume of the chemicals, definitely we are continuously increasing since last 3 years. Any chemicals, if you see, it is in more than double-digit growth. Definitely more than double-digit growth, it will not come in the future due to the global recession, but at least single-digit will grow. So we are not in the place where the market and the demand will diminish like or we are not growing, so definitely in the growth percentage there would be changes in the future if the recession will come in the future. But that in terms of the volume, definitely we will increase in terms of the chemical consumption in India. And so based on that, we are saying that we are coming with a new project which is import substitute and as a derivative of the chloroalkali. And as we announce and we stabilize the CPVC in ECA, definitely we will announce more projects in coming time.
And my last question, thank you very much for this detailed answer. And my last question is in respect of, though you are now going to produce the CPVC, which is import substitute, now how an investor get a confidence the quality of the product which you are going to produce will be either same or better than what is being imported? Because now here we are talking about a product which has never been manufactured in India. So first time you are manufacturing. Now, how much confidence you are getting from your customer like Astral or Hindware or whoever is the producing the pipes here who use the CPVC, that there is an optimum chance for you in terms of the quality and other factors that this product manufactured within India will be easily replace the imports in terms of quality, in terms of cost, in terms of acceptability. Because I'm sure, even though the plant is commercially started now, you guys might have already did the market research, you might have already touched with your customers to see how the product is coming, how they're acceptable or not. What's the feedback at the moment?
Yeah. So, this is a good question. If you ask 3 months back, it is very difficult for us to answer this question, But now I can say that after commissioning of CPVC and the different customers have started trialing of the CPVC resin in their machine, we feel more confident now, and the actual quantity will increase from Q3 onwards. So now we are getting more positive about our product, what we produce right now, and we are more confident that the Q3 onwards the volume will start increasing.
So it will easily replace in terms of quality of what we are getting from the imported items?
So, if you analysis well of the CPVC market in India, there is no replacement is required. Indian market is continuously increasing double-digit growth, and the worldwide there is no capacity expansion of the CPVC resin. So we are not going to replace anyone. The people who are growing, they require additional resin, we will supply them.
Yeah, but this additional resin should be as par of the quality of what they are importing, right?
Definitely,
the quality as well as the price.
If quality will not be at par with anything, then definitely the customer will not be able to buy. So as I said, once we started commissioning and we started trial order with a lot of customers, we are more confident that we can able to start actual generating sales from Q3 onwards.
We actually have been seeing the acceptability in the market already. And as the months go by, as we said, 45 days and all, we'll see more and more people accepting this product, and that's the reason we are saying that the sales will start from Q3. Yes, the product has been and continues to be accepted in the market in terms of quality.
That's very good. And one bookkeeping small question. The fixed asset increased from 21 to 22. 21 it was 1,200 something. In FY22 it was 1,657. Whereas your depreciation increased only from 74 to 86. So it's not really matching. I don't know. Depreciation increase is quite lower compared to the value of the fixed assets increase between 21 and 22. It's a little bookkeeping question just to understand the clarity on this.
Okay, just to answer your question about the depreciation, if you look at the history, we continuously making putting our plant, commissioning the plant one by one. Like we have commissioned in 2019 CMS. In 2020 we commissioned the hydrogen caustic. So the impact, since we have commissioned the mid of the year, so impact is not for the whole year, for the full year. But yes, if you look at the numbers, looking to the useful life based on the operation and maintenance and everything, we have considered depreciation is well in the line with the useful life of the asset is well within the industry norms.
Not all projects would have been commissioned at the beginning of the year. So obviously the depreciation only kicks in when the commissioning of the projects happens. So while the total block might look bigger, but the depreciation will only happen in full strength once all the projects have been commissioned, which will be this year.
Yeah. So till that time, you commissioning the interest and the interest part, and then other part is not, you cannot see in the depreciation part. Yeah. After commissioning, I think you can see the actual depreciation. So all the capex which was on the pipeline.
Thank you, sir.
Yeah.
Thank you very much for your detailed answer. Thank you.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Kindly proceed.
Thank you very much, sir, for the opportunity. Sir, just wanted to check, now this 18.5 megawatt solar plant that we expect to commission by third quarter. So what sort of savings we are expecting from it?
So at least, right now we are getting a power from the grid and the captive power plant. Definitely that much amount of the units which we are generating from the renewables, definitely it will save around more than 30% of the power cost.
Okay, so would it be possible for you to quantify in rupees crores annually what sort of savings we can have there?
See, that can be measured in a way that out of 18.34 megawatt, generally, because it's a green energy and wind and solar power plant, it works on a 50%, so we would be getting around 10 megawatt on a yearly basis. So we'll be saving on 30%, and I'm sure you can calculate that in a better way.
Okay. So 30% on.
Yeah.
Sure, I understood. And my second question is, now new plant you mentioned will meaningfully contribute from maybe third quarter in terms of incremental volume. And by fourth quarter you expect it to reach optimum capacity utilization by fourth quarter of FY23. That's what you mentioned.
Yeah, for epichlorohydrin plant, we expect that by Q4 FY23 will reach to optimum capacity utilization, and for CPVC it will be end of Q4 or early Q1 FY24 will reach the optimum capacity utilization.
Okay. And so what sort of incremental revenue one can expect from these two new plant, ECH and CPVC? Now I think currently we are doing around 550 crores, right? So can it add 150 crores quarterly basis? So some guidance on that would help.
See, if once we reach the optimum capacity utilization, which I said earlier will happen in Q4 and Q1 for this year and next year. So once we reach there, all put together, it should be somewhere around 1,300, 1,400 put together. 12 to 1,300. Yeah. 1,200
to 1,300 crores annually, right? So quarterly we are talking about maybe 300 crores additional revenue from these two projects, right?
No, let me put it like this. See, FY22 we ended with a 1,500 CR of top line. So this year additional revenue of in terms of volume will be growing by around 18-20%, and that will be coming from ECH, CPVC, and the additional capacity of caustic soda. But again, this year we will be not running on a full capacity because we have just commissioned the plant. It takes time for it to reach to optimum capacity utilization. Right. So once we reach optimum capacity utilization, which will be happening FY24 onwards, there ECH and CPVC put together should be around 1,200-1,300 CR.
Okay. So in FY24 only, but these two new plants can give additional revenue of 1,200 to 1,300 crores, right?
Yes. But this is based on the current raw material, which is and the current prices are going on. So if the future is major impact on the raw materials and the prices, definitely the sales price will adjust accordingly.
Okay, fair enough. And regarding your margins outlook that you mentioned, so do we expect any kind of drag while these two new plants are suboptimally utilized, maybe in third quarter or fourth quarter? So that may result in some kind of drag on your margins. That's the reason we are kind of looking at 26% plus minus 2% as compared to 35% we reported this quarter.
When we have given a guidance of 28% plus minus 2 EBITDA margin, that is for a longer period of time. It has nothing related to the current commissioning of the ECH and CPVC. So in this quarter of also the prices that were in Q1, if that kind of situation maintains, we can make the margins of 31%-32%. But we know the current prices are elevated and it will go down to some level, and that is why on a conservative side we are saying 28% plus minus 2%. But if Q1 kind of situation continues, then we can maintain margin to be above 30% also. So it has nothing to do with the commissioning of the ECH or CPVC in that matter.
Okay, I got it. I understood. Yep, that's it from my side. All the very best. Thank you.
Thank you. We request participants to kindly restrict your questions to 3 per participant. The next question is from the line of Amit Vora from Dr. Amit Vora's Homeopathic Clinic. Kindly proceed.
Yeah. Good afternoon, everyone. Good afternoon, Maulik bhai.
Good afternoon.
My question is regarding the new products, ECH and CPVC. Now, I've heard you somewhere on CNBC that you told that ECH sales can go to around 1,000 crores annually. Did I hear it correctly from there? Is it right?
Yes. So ECH, it can go there, that level, based on the current raw material prices, on when we reach to optimum level of the plant.
Yeah. Can you give something similar figure on CPVC also, if possible?
So CPVC, we along with the commissioning, we have given a guidance that when we reach to optimum level, we can reach to around 400 crore based on the current raw material prices. Yeah.
Per year, CPVC.
Yeah, per year. Yeah. On optimum level when we reach. Yeah.
Okay. And currently our ECH capacity is 50 KTPA and CPVC is 30 KTPA.
That's right.
So can we, in future, 1 or 2 years down the line, can we expand it further also? Is it possible?
Yes. So it depends on that point of time, what is the situation. But yes, that is, definitely that is always like the caustic soda, what we have expanded based on our strength, what we have, based on the demand which we have. So definitely once we have, definitely these 2 products have a very high chance in the future we might expand. But that time to look at the scenario, and that time that depends on the return what we are generating, or do we have a better opportunity from some other products. So we might select that product as a priority in terms of capex. So yeah.
I got that. I understood that. Okay. And there are new people also. There are people who are coming up with ECH and CPVC manufacturing, new companies. So do you see that affecting our sales anywhere down the lane?
So normally, definitely, because India is a growing country, and many people can come in the future because the demand is growing. So if demand is growing and if you are not able to fulfill the demand, then definitely somebody else will also look at it as a opportunity in the market. But looking at the current scenario, the demand of both all the products which is growing in India, and if the people are come, definitely still we are short. There are huge difference in terms of supply demand right now. If you see in the CPVC, so definitely and the ECH also. Looking at the future capacity which is expanded by the epoxy resin manufacturers. So there is a huge opportunity in terms of the capacity addition in both the products.
Okay. And my second question, and almost the last question, the debt by the end of this year. What do you see? Where do you see the debt by the end of this year, FY23 end?
For FY23 end, the debt may be around long-term debt, maybe around the 550 sort of thing, 550 crore. Long-term debt.
Currently it is 900 crores or something, I think so.
Long-term debt currently is 690 crores, which is going to reduce for the year as a whole. That is on 31st March 23, around 550 crores.
Okay. Any other foreseeable risk in any of our products that you see currently, CPVC, ECH, or chlorotoluene or anything? Any foreseeable risk that this could be risky for us? Probably, not sure, but.
As of now, I don't think so, but I think definitely in the world is looking after what action is Russia is doing with Ukraine. Because of that, the current energy cost and the current gas prices and current crude oil prices are and the China lockdown. Such kind of scenario is very difficult to predict for a longer period of time. So yeah, there is uncertainty in this kind of reasons. It is going to be there and it will continue. I think probably at least in Q2 or Q3 at least.
Thank you so much, sir. Thank you so much. That's all from my end.
Thank you. The next question is from the line of Riya Mehta from Equitas Investment. Kindly proceed.
Hello. Thank you for giving me an opportunity again. So I would just like to ask one question. So what would be on a depreciation on an annual basis, considering commissioning of CPVC, ECH as well as the incremental costing for FY23 as well as 24?
With the full year operation, when we commission all these plants, the depreciation annual basis will be around 120 crore.
120 crores. And is there any, what will be the impact for the rising interest rate currently?
Yeah, interest rate has little bit gone up, but for the company as a whole, which was till FY22, which was sub 7, it is now in the range of 7.5% for this quarter onwards.
Okay. Okay. And could you repeat the debt numbers? Actually, I missed it.
Yeah. The total debt of the company, long-term debt was 690 crore for 30 June 2022. For the year as a whole, that is March 23, that will be reduced to 550 crore.
Okay. Thank you.
Okay. Yes.
Thank you. The next question is from the line of Nitin Gandhi from Pfizer Global Services. Can you proceed? Excuse me, Mr. Gandhi. Mr. Nitin Gandhi, can you hear us? As there's no response, we'll move on to the next question. The next question is from the line of Keshav from Raxan Investors. Can you proceed?
Hi, good evening, sir. Sir, what is the maintenance capex currently and going forward once we stabilize ECH and CPVC as a percentage of gross block, if you could tell?
Looking to the size of where the company is going, we expect that 2% of our total gross block will be the maintenance capex on a yearly basis.
And currently, what is it, sir? If you could give the figure for the last year.
It's around 1.5 sort of thing as of now.
Okay. Thank you, sir. That's all from me.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
Yes, good evening, everyone. In conclusion, with all this, we are moving in line with our commitment of long-term goals and with focus on environment and sustainability. Once again, thank you, ladies and gentlemen, for joining us today. If there are still unanswered questions, please feel free to reach us to our IR team. Thank you, everyone, for your participation. Have a great evening ahead. Stay safe, stay well. Thank you.
Thank you. On behalf of Go India Advisors, that concludes this conference. Thank you for joining us. You may now disconnect your line.